Greetings, everyone. Today, we're diving into the fascinating world of global economics, focusing on the powerhouse that is China. Recent developments have prompted us to adjust our growth forecast for the nation, painting a more optimistic picture. Following a significant stimulus package and clear pro-growth signals from Chinese leadership, we at Danske Bank have revised our 2025 growth forecast for China from 4.8% to a more robust 5.2%. This shift reflects renewed confidence in China's economic trajectory. This isn't just a nudge, it's the most robust and coordinated effort to stimulate the economy since the global financial crisis of 2008. This shift in China's economic landscape has profound implications for investors and businesses worldwide. But our exploration doesn't stop at mere numbers and forecasts. Today, we're delving into the fascinating realm where ancient wisdom intersects with modern financial strategies. We're talking about the profound influence of Yin Yang, a philosophy deeply rooted in the ancient Chinese text known as the Yi Jing, or Book of Changes. This ancient concept holds remarkable relevance in understanding the cyclical nature of markets, the balance between risk and reward, and the importance of adaptability. Just as the forces of yin and yang interact to maintain harmony in the natural world, so too do opposing forces shape the landscape of global finance. Get ready to embark on a captivating journey that bridges the wisdom of the past with the realities of the present. Some might look at the scale of China's stimulus and draw parallels to the response to the 2008 financial crisis. And indeed, there are similarities. Both situations called for swift and decisive action to avert economic disaster. However, the context surrounding China's current stimulus is distinct, shaped by both domestic and global factors. Back in 2008, China's stimulus primarily focused on infrastructure spending, a classic Keynesian approach to boost demand and create jobs. This time, the focus is more nuanced, targeting specific sectors like technology, green energy, and domestic consumption. It's a more targeted approach aimed at fostering sustainable and balanced growth. Understanding the current stimulus requires recognizing China's evolved economic might and its strategic shift towards a more balanced growth model. This coordinated push involves a multifaceted approach, combining fiscal measures, monetary policy adjustments, and targeted industry support. On the fiscal front, we're seeing increased government spending on infrastructure projects, particularly those related to renewable energy and technological advancement. This not only creates jobs and stimulates demand, but also aligns with China's long-term goals of becoming a global leader in these sectors. The People's Bank of China has been easing lending rates, making it easier for businesses to access capital and invest in growth. This injection of liquidity into the system is designed to boost economic activity across various sectors. Furthermore, the government is providing targeted support to key industries, fostering innovation and entrepreneurship. This includes tax break subsidies and other incentives aimed at propelling growth in areas like technology, green energy, and high-end manufacturing. Now, some might raise concerns about inflation, given the scale of the stimulus being injected into the Chinese economy. It's a valid concern, as excessive stimulus can lead to rising prices and erode purchasing power. However, we believe that China is well positioned to manage inflationary pressures thanks to its prudent economic policies and robust domestic market. The stimulus measures are being rolled out gradually, allowing policymakers to monitor their impact and make necessary adjustments. This measured approach helps prevent a sudden surge in inflation. China has a strong track record of managing inflation, with the government willing to take decisive action when necessary. Moreover, China's vast domestic market provides a buffer against imported inflation. Now let's delve into the fascinating realm where ancient wisdom intersects with modern economic management. The concept of Yin Yang, deeply rooted in Chinese philosophy, offers valuable insights into navigating the complexities of financial markets. This ancient concept reminds us that economic cycles are inevitable, just as day follows night. By understanding the cyclical nature of markets, we can better anticipate shifts and make more informed decisions. When the economy is in a period of expansion, Yang, it's a time for calculated risk-taking and investment. Conversely, during periods of contraction, Yin, prudence and caution are paramount. The key lies in finding the right equilibrium, adapting our strategies to the prevailing economic conditions. While the stimulus package and pro-growth signals offer reasons for optimism, we must also address the dragon in the real estate market. The ongoing housing crisis in China stands as a significant headwind to robust economic recovery. The property sector, for years a driving force behind China's economic expansion, has experienced a dramatic slowdown. Over-leveraged developers, declining property values, and a crisis of confidence among home buyers have created a perfect storm. This housing slump has far-reaching implications, impacting everything from construction and manufacturing to consumer spending and financial stability. Understanding the depth and complexity of this housing crisis is crucial for accurately assessing China's economic prospects. It's not merely a bump in the road, it's a fundamental challenge that requires careful navigation and strategic intervention. Now, some might call for drastic measures, a swift and forceful intervention to jolt the housing market back to life. However, we believe a more measured approach is necessary, one that addresses the root causes of the crisis while mitigating potential risks. Think of it as carefully tending to a wounded dragon, providing nourishment and support to facilitate its natural healing process. Our analysis suggests that a gradual improvement in the housing market is more likely than a rapid rebound. This measured recovery will be driven by a combination of factors, including government support, easing credit conditions, and a gradual return of buyer confidence. The key lies in striking a delicate balance, providing enough stimulus to prevent a complete collapse of the housing market while avoiding excessive interventions. The impact of China's housing crisis extends far beyond the real estate sector itself. It's like a stone cast into a pond, creating ripples that spread throughout the broader economy. The slowdown in construction activity has had a knock-on effect on related industries, such as steel, cement, and manufacturing. With fewer new projects underway, demand for these materials has slumped, impacting production and employment. Furthermore, the decline in property values has eroded household wealth, leading to reduced consumer spending. When people feel less wealthy, they tend to tighten their belts, impacting retail sales, tourism, and other sectors reliant on consumer confidence. Moreover, the housing crisis has raised concerns about financial stability. The housing crisis highlights a fundamental imbalance within China's economic structure, an over-reliance on the property sector as a driver of growth. For years, the rapid expansion of the housing market, fueled by easy credit and speculative investment, overshadowed the need for a more balanced and sustainable economic model. This overemphasis on the young aspect of growth, characterized by rapid expansion and material accumulation, neglected the yin aspects of stability, balance, and long-term sustainability. The current crisis serves as a stark reminder that true economic prosperity requires harmony between these opposing forces. Just as a healthy ecosystem thrives on biodiversity, a resilient economy requires a diverse range of growth engines. As we've seen, China's economic landscape is marked by both impressive growth and looming challenges. The situation calls for a nuanced approach, one that recognizes the interconnectedness of various factors and the importance of seeking equilibrium. This is where the ancient wisdom of Yin Yang proves remarkably relevant. Imagine the Chinese economy as a majestic dragon, its immense power requiring careful balance to soar gracefully. Too much emphasis on Yang rapid expansion, aggressive investment, relentless pursuit of growth can lead to overheating, instability, and ultimately a painful correction. Conversely, an excessive focus on yin, extreme caution, excessive regulation, resistance to change, can stifle innovation, limit opportunity, and result in stagnation. The key lies in finding the middle path, the harmonious balance between these opposing forces. Just as the seasons change in a natural cycle, So too does the economy experience periods of expansion and contraction. These economic cycles are a natural part of the system, reflecting the ebb and flow of investment, consumption, and overall economic activity. Yin-Yang wisdom teaches us to embrace these cycles rather than fear them. During periods of economic expansion, Yang, it's natural for businesses to invest, for consumers to spend, and for the overall mood to be optimistic. However, it's also crucial to remember that these periods don't last forever. As the cycle shifts towards contraction, yin, a sense of caution sets in. By understanding the cyclical nature of markets, policymakers and business leaders can make more informed decisions. China's economic miracle has been nothing short of remarkable. Yet, this rapid ascent has also exposed the risks of an unbalanced growth model, one overly reliant on investment, exports, and heavy industry. The concept of yin-yang reminds us that true sustainability requires balance across all aspects of the economy. Overemphasizing material growth, yang, without adequate attention to social well-being, environmental protection, and equitable distribution of wealth, yin, creates a system that is inherently unstable. Therefore, China's pursuit of sustainable growth must involve a shift from excess to equilibrium. The influence of yin-yang on Chinese policymaking is evident in the government's current approach to economic management. There's a clear recognition of the need to balance short-term stimulus measures with long-term structural reforms. For instance, while the government has injected significant liquidity into the system to boost growth, it has also taken steps to address financial risks, such as curbing excessive lending and shadow banking activities. This dual approach reflects an understanding of both the need for stimulus, yang, and the importance of financial stability, yin. Furthermore, China's focus on developing strategic emerging industries such as renewable energy, electric vehicles, and high-tech manufacturing demonstrates a commitment to transitioning towards a more sustainable and innovative economy. This shift aligns with the yin-yang principle of embracing change and adapting to evolving circumstances. By investing in the well-being of its citizens, China aims to create a more equitable and sustainable society. Unveiling the binary logic of the Yi Jing. Let's delve into where ancient wisdom meets modern technology. The Yi Jing, or Book of Changes, is a profound system influencing philosophy, mathematics, and computing. At its heart lies a binary system, expressed through intricate hexagrams. Lines, whole for yang and broken for yin, form 64 unique hexagrams. This ancient binary system shares principles with modern digital code. The Yi Jing anticipated modern technology, connecting ancient wisdom with the digital age. Section 2. From hexagrams to algorithms, the Yi Jing's influence on modern computing. How did this ancient Chinese text influence modern computing? Gottfried Wilhelm Leibniz, a 17th century mathematician, saw a connection between the Yi Jing's hexagrams and binary mathematics. He recognized the hexagrams could represent zeros and ones, laying the groundwork for digital computers. The Yi Jing's principles of change and balance resonate with computer science. Beyond ones and zeros, yin-yang influences technology deeply. It shapes how we design, interact with, and understand the digital world. Duality in technology is fundamental to our advancements. AI development balances logical thinking, yang, with adaptive learning, yin. Cybersecurity dances between attack, yang, and defense, yin. This interplay reflects yin-yang's dynamic tension. As we stand on the cusp of a new technological era, with quantum computing poised to revolutionize fields from medicine to materials science, the wisdom of yin-yang offers a guiding light for navigating this uncharted territory. Quantum computing, unlike classical computing, harnesses the principles of quantum mechanics, where particles can exist in multiple states simultaneously. This inherent duality, mirroring the yin-yang concept, allows quantum computers to perform calculations at speeds unimaginable with classical computers. The potential applications of quantum computing are staggering, from developing new drugs and materials to breaking complex encryption codes and revolutionizing artificial intelligence. However, this immense power also comes with significant challenges and ethical considerations. The Yin Yang philosophy reminds us that technological advancements should not be pursued in isolation, but rather within a framework of balance, ethics, and a deep understanding of potential consequences. As we unlock the transformative potential of quantum computing, we must do so with wisdom, foresight, and a commitment to harnessing this power for the betterment of humanity. Let's explore how yin-yang wisdom can guide sound financial decisions. Investing is about navigating uncertainty, managing risk, and seeking growth. Balance and adaptability are paramount. Imagine a seasoned investor guided by market cycles and long-term growth. This is the essence of the yin-yang approach to investing. Market exuberance, yang, is followed by corrections, yin. They maintain equilibrium, adjusting strategies to market conditions. Risk and reward are two sides of the same coin. The balanced portfolio, embracing diversification and managing risk. One of the most practical applications of yin-yang in investing lies in the concept of portfolio diversification. Just as a healthy ecosystem thrives on biodiversity, a resilient investment portfolio benefits from a balance of different asset classes. Think of your investment portfolio as a garden. You wouldn't plant all your seeds in one small area, would you? Similarly, concentrating all your investments in a single asset class, no matter how promising it may seem, exposes you to unnecessary risk. Diversification involves spreading your investments across various asset classes, such as stocks, bonds, real estate, and commodities. Each asset class has its own risk-return profile, and by diversifying, you create a buffer against losses in any one area. The yin-yang principle comes into play when determining the right balance within your portfolio. During periods of economic expansion, yang, you might tilt your portfolio towards growth-oriented assets, such as stocks. Conversely, during periods of uncertainty, yin, you might increase your allocation to more conservative assets, such as bonds. Riding the dragon's breath. Navigating market cycles with yin-yang wisdom. As we've discussed, market cycles are a natural part of the financial landscape. Just as the dragon breathes in and out, markets experience periods of expansion and contraction driven by a confluence of factors, including economic growth, interest rates, investor sentiment, and geopolitical events. The key to successful investing lies not in predicting these cycles with pinpoint accuracy, but rather in understanding their nature and adapting your strategies accordingly. This is where the wisdom of yin-yang proves invaluable. During periods of market exuberance, yang, when prices are rising and optimism abounds, it's easy to get caught up in the excitement and make impulsive decisions. This is the time to exercise caution, remembering that what goes up must eventually come down. Conversely, during market downturns, yin, when fear and uncertainty prevail, it's tempting to panic and sell everything. However, this is often the worst time to sell, as you're likely to lock in losses and miss out on opportunities when the market eventually recovers. The yin-yang investor, guided by a long-term perspective, recognizes that market cycles are opportunities for both profit and growth. Ancient wisdom, modern prosperity, the enduring relevance of yin-yang in finance. As we conclude our exploration of China's economic landscape through the lens of ancient wisdom, it's clear that the principles of yin-yang are not merely relics of the past, but rather timeless guides for navigating the complexities of modern finance. Think of the yin-yang symbol not as a static image, but as a dynamic dance between opposing forces, risk and caution, growth and stability, opportunity and challenge. This ancient concept reminds us that the financial world is in constant flux, a flowing river of ever-changing currents. We've seen how embracing balance, understanding cycles and adapting to changing conditions are not just philosophical musings, but rather practical strategies for investors, business leaders and policymakers alike. The wisdom of Yin Yang provides a framework for making sound decisions, managing risk, and ultimately achieving sustainable prosperity. Just as a skilled sailor adjusts their sails to harness the wind, so too must we learn to navigate the economic winds of change, guided by the principles of balance, adaptability, and a deep understanding of interconnectedness. The journey continues, embracing balance and adaptability in a changing world. The world today is a tapestry woven from complex threads: economic, technological, environmental, and social. Navigating this intricate landscape requires more than just technical expertise. It demands wisdom, foresight, and a willingness to embrace change. The ancient principles of Yin Yang, far from being rigid doctrines, offer a framework for understanding the interconnectedness of all things, recognizing that every action has a reaction, and that seeking balance is essential for long-term sustainability. As we move forward, let us carry with us the lessons learned from this ancient wisdom. Let us strive to make decisions that are not only financially sound, but also ethically grounded, socially responsible, and environmentally conscious. The journey towards a more prosperous and harmonious future requires embracing both the dynamism of Yang and the groundedness of Yin, recognizing that true progress lies in finding the delicate balance between these opposing yet complementary forces.